Hi, everybody. Welcome back to Dividend Stockpile, where we talk about all things dividend income investing related. We're here with a special guest, Adam Patti from VistaShares. He's the CEO of this innovative ETF company. And I invited him on today to talk about one of his great products that he has to offer. So Adam, welcome to the channel. And can you give us a little bit of background about yourself and the company VistaShares?
Yeah, well, thanks for having me today. I'm really excited to be on and talk about some of our solutions. So, yeah, I've been in the ETF market since 01. My last company, I started in 06, sold it to New York Life in 2015. We specialize in liquid alternatives. It was a company called Index IQ. And I was at New York Life until 2018, rolling out their global ETF platform. And then I was out of the industry for a few years and had the opportunity to fortunately get back in and into an industry that I love and start VistaShares almost a year ago. Actually, my official the start date was last April 1st, April Fool's Day. So
Okay.
it's almost a year, and we're rolling, and I'm really excited. VistaShares is, we're trying to bring out really high quality solutions that fill gaps in the market for investors. We're not looking for Me Too strategies or products that I would deem as not high quality and don't have a purpose or a use case that's very clear for investors.
Yeah, so I was looking on your guys' website. The two ETFs you have live for the public investor right now are very innovative. So it definitely caught my attention as well, and that's why I wanted you to come on. I think you guys are doing something very different than what a lot of the other ETF companies are doing right now. So very excited to dig into this ETF and talk about what it offers investors, what your goals are, and the approach you guys take. So on a high level, can you explain the approach to your ETFs before we get into the details of this one particular one?
Sure. We have right now we have two distinct families of products. One is what we call our pure exposure ETFs, which is our first foray into that market is our AIS, artificial intelligence Supercycle ETF. And the whole premise behind those products is to really go after what we view as kind of the most disruptive technological trends that are impacting the world right now. So things that we deem are super cycles. So artificial intelligence is clearly a super cycle. There's a lot of artificial intelligence funds out there. But why we got into this is because we view those as inferior products where if you really look under the hood, you're not really getting AI. You're getting Mag 7 exposure, paying 60, 70 basis points for it. So myself and my partner, John McNeil, who was the former president of Tesla, he recognized that first, and which is why he wanted to get into the ETF market. And he and his research team came up with kind of a new way of looking at technology by creating a bill of materials based investment process, really digging into the supply chain and trying to find those hidden gems around the world. The companies that are actually creating the infrastructure for AI, the data centers, all the components of a data center and the components of semiconductors. And we'll be doing this bill of materials process across several different technology sectors. So AIS is our first foray into that. Our second family of products is income, something that's very important for investors. Clearly, I know that we'll be talking about today, so I won't belabor that. But we view the income space as very important. There are some very good products out there, but we think there's a lot of white space for innovation and to create value for investors.
Yeah, definitely. It's very, I love the thematic type of ETFs that are out available to investors now. Back in the day, you used to have to buy the individual stocks of the companies you research and package them together on your own. But now with the innovations with the ETF space, the thematic processes and the different categories out there are a lot easier to invest in right now. I personally have a whole sliver of my investment portfolio in different themes, one of which is AI. I also am very big into sustainable investing, so I have some that focus on that, water resources, things like that. So having the ability to target specific areas that you as an investor feel like are going to be the future is a very powerful thing that we have available to us now. So that's great that you guys are coming up with another product and a new approach to those products, because to your point, a lot of these AI ones is just a Mag 7 and you're just replicating what's already in the SPY or QQQ. This way you get very targeted exposure to that specific theme, which is really great. But, the income side of it, which is the one we're going to talk about in just a second, of course, for myself as a dividend investor, it's very important to have that current income. And so it's nice to be able to have exposure to certain equities, but also get the income from the options while you're doing it. So I think that's where your product comes in really well. So let's go and hop into the main one. So the one we're going to talk about today is ticker OMAH, the VistaShares Target 15 Berkshire Select Income ETF. So that's a mouthful, but can you give us a high-level overview of what the ETF is all about and what your strategy is?
Yeah, I mean, look, we were looking into the market to see where the gaps are and where we can add value. And one thing that was interesting to us was the number of investors that are, disciples or followers of Warren Buffett. I mean, clearly, who isn't, right? I mean, he's the best investor who ever lived. So there's a lot of investors invested in Berkshire Hathaway, BRK.B or A, of course, but BRK.B is the more affordable one. So, in BRK.B or Berkshire Hathaway generally is an interesting investment on its own. It has, has a value tilt, if you look in the Fama French factors. But there are some, there's some growthy equities in there, of course, with Apple as their second largest holding, or actually their first largest holding now. So, it's a very interesting basket of securities that you can own by owning Berkshire Hathaway. But the interesting thing there is that Berkshire does not pay a dividend.
Correct.
So we said, well, wait a minute. What if we can harness the power of Warren Buffett and his brilliance in investing and provide a similar, portfolio of equities, but provide that income overlay? And that's what Omaha is. OMAH, Omaha, I call it Omaha. It's OMAH without the A at the end. Oracle, right?
Yes.
So, and that's what we do. So very simply, what the portfolio is, it's comprised of 21 equity securities. Our biggest holding is BRK.B first, and then we hold the next 20 largest holdings of Berkshire Hathaway in the correct proportions that they have it in Berkshire Hathaway itself. So it's 21 equity holdings, and then we overlay our income process, our options process on top of that to provide a target of 15% annual income, which we pay out monthly, with a target of 1.25% monthly.
Okay, so you get exposure to Berkshire, you get exposure to the mind of Warren Buffett, if you will, based on what he's investing in every quarter. You own the individual securities in addition to Berkshire. But then you guys are doing an options overlay on those holdings to generate that 15% annualized income on top of it.
Correct.
So you get the upside of Berkshire, you get some of the upside of the individual holdings, but you also get the cash today based on the premiums received from those holdings. So from your website, and I'll pop it up on the screen, it says your goal is to seek high monthly income generation. You have the core equity exposure to large and mid-cap companies that Berkshire holds. And what you were just mentioning, the professional options management. So you don't have to go do it on your own. You can employ this ETF to do the options writing for you. Now, there's a lot of different ways that ETFs and individual investors manage their options. And so I was looking at your current holdings and the options that are written against it. It seems like you're writing calls on the majority of the underlying. Can you talk about that strategy a little bit?
Well, exactly. We're trying to be as diversified as possible and stay true to the strategy as possible. So, we are selling calls on hopefully all of the underlying, and we're rolling those throughout the month, of course, to make sure that we're hitting our targets. If there's something going on in the market where there's not enough volatility in a name, we have the flexibility to use index options and things like that if we had to. But the strategy is to sell on the individual names, sell the calls on the individual names. And one thing that we're doing that hopefully is a little interesting, particularly in such a volatile market, is using call spreads as well. So it's something I think it's kind of unique in the ETF market. So we're going to be doing that when appropriate. If we're seeing a big drawdown with the potential for a big snap up in the equity prices, we're going to use those call spreads to try to capture that upside.
Yeah. So I was looking, it looks like the fund has been in existence for about 3 weeks now, maybe a little bit more than that. What kind of income are we expecting going forward? I know the first ex-div date is in a couple of days. What kind of income are we talking about on a monthly basis, expectation-wise?
Yeah, we're targeting 1.25% monthly.
Okay.
15% annually.
Yep.
So
is that a structured distribution, or will it vary every month depending on how your options process is going?
Well, we're structuring it, and that's the target for sure. But again, I don't ever want to overpromise and underdeliver to an investor or anybody. So there could be months where we're providing a little bit more or a little bit less, depending on what's going on in the marketplace. For instance, right now, we're a big, we're a small fund. But we've had a ton of volume. So there's always a risk that if we get a ton of creation units popping in at the last second, that our distribution goes down for the month, but we make it up on the next month. So there's, I don't have any insight into that today. Our declaration date is tomorrow. So we should have the numbers at the end of the trading. So I think we'll be in very good shape for our target this month.
Awesome. Okay. Yeah. And I'll put that up on the screen afterwards, what the final distribution is for this month. So I see your net assets is about 3.5 million as of your last update. And for only being in existence for about 3 weeks, I think that's a really good start.
Yeah, thank you. I mean, I'm thrilled. We started out at $1 million with seed capital. We burned through that and put in 3.5 total so far. And frankly, I think there's got to be a bunch of creates in the wings, because we've been averaging. We had 37,000 shares traded yesterday. I mean, we're getting 30, 35, 40,000 pretty regularly now, which is amazing. And I'm thrilled. I mean, I'm honored to have that opportunity to be involved in a fund like this that gets that kind of excitement from investors so quickly. Because frankly, we haven't even really been talking about the fund that much yet until we get our first distribution out there.
Yeah.
And of course, now once we get that this week, we'll be out there talking about it a lot more.
Yeah, sounds good. Happy to put the word out there and raise the awareness of this fund. So yeah, it'll be great to see what that distribution is, and I'm sure that a lot more people will be excited once they see that the targets you're shooting for are actually achievable. Going back to the options themselves, it looks like you guys write monthly options and then roll them as needed. But is there a certain date to expiration or a certain delta that you guys are utilizing, or is it data dependent each month?
It's data dependent, and it's market dependent. And, as you know, we're in a pretty interesting market these days.
Yes.
With volatility. So yeah, I'd rather not lock ourselves into answering that in a way that, again, I might be incorrect and provide incorrect information. So we're being very flexible and we're being very active. We're looking at it constantly. The portfolio is being reviewed throughout the day, every day. We've got our investment committee made up of some pretty serious people that have a lot of experience in this space and in investing generally. And we're just trying to put a really quality product out there for the long term. And I think what's interesting about this fund is that there's really two distinct use cases that are really clear. One is, core equity, right? You want a core equity holding to complement some of your other, positions you may have. This is a great thing to use for that. But also what's interesting is that if you already own Berkshire Hathaway, given that it doesn't provide that dividend, you can create basically a synthetic dividend by using this as a complement to your Berkshire exposure.
Yeah. So if you're interested in following Warren Buffett and Berkshire and you want to own the products, but you're an income investor, this is a great alternative to get a little bit of both. You get the income that you're looking for as an income investor. We also get exposure to the mind of Warren Buffett, if you will. And to your point, Warren Buffett has said he'll never pay a dividend as long as he's alive, and he's held true to that for multiple decades now. So future, who knows what we'll end up doing, but I seriously doubt it will ever be a 15% dividend. So if you're looking for that current income, this might be the path forward. So you said you are active income. It is a monthly distribution. Can you talk about the expense ratio on this fund?
Yeah, it's a 95 basis point expense ratio, and it's an expensive fund to run. So, I think it's a fair number. I mean, if you look at some of the competitive set, they're kind of in the high 60s and so forth, but they're providing 10 to 12%. So, we're providing that extra, 3 to 5% income. So for the extra 25 basis points that we're charging.
It's very reasonable for the amount of work that you guys do. I personally write my options on my portfolios on my own, and it's a lot of work, researching, determining, do the actual trading itself, monitoring the market and the risks involved. So to pay 1% a year to have someone else do that is very reasonable in my mind. I wanted to ask about your processes for the options writing. Are the options writing done on a rules-based method, or is it up to the individual traders? How does that operate?
Well, I think it's a mix. It's a mix
Okay.
for us, and that actually goes to the core portfolio of of our other ETF. We are very into transparency and rules based process, but you need that active overlay to make sure that things are going right. So we have the parameters set of what we're looking for on an individual names basis, on a
Mm-hmm.
daily basis, looking every day. What is the what is the price action of those securities that are in the portfolio? What are the options? How are they being priced? What is going on in that market? So that's part of the rules based process of a screening process to go through the universe of options out there to see what we need to be doing to hit our thresholds. But
Mm-hmm.
then the portfolio managers need to have their discretion to fit it in properly, time it properly,
Mm-hmm.
and make sure we're making the right decisions on a daily basis. So, and I think that's the benefit of this. So there is the rules based process, but we have the active overlay, and I think that's kind of important. So we're not, we are an active ETF, but when you think
Mm-hmm.
of active, you think of a portfolio manager waking up and making decisions and wheeling and dealing. That's
Mm-hmm.
not happening. Rules based with the active overlay, and the active overlay is focused on risks and opportunities. Right. First, we're looking at the risks. Where can we mess up? Let's not do that. And then where are the opportunities to bank the income early. Like this month,
Mm-hmm.
we banked. I think all of the income, at least based on the fund size at that time, a week in, we were able to bank
Yeah.
income
Yeah.
because of all the volatility in the market. So we're looking for those opportunities to take risk out of the fund.
So I know that you have the two ETFs as of right now. So briefly, can you explain kind of what's on the horizon? What else is VistaShares thinking of going forward?
Yeah, I mean, in terms of these two families of products, we're going to go deeper in both. On the Supercycle side, we have other products that are queued up. We'll be filing for additional ones. And on the income side, we don't have launch dates in hand yet, but we have 4 additional income strategies that have been approved and are ready to launch, which we
Mm-hmm.
think are very interesting. So I don't know how familiar you are with factor investing.
Mm-hmm.
Quality, momentum, low
Yep.
vol, value. My old background in the liquid alt space, I was very into all the factors and kind of the monitoring factor exposures and how to use them to optimize portfolios. So we have 4 products that are queued up: low vol, quality, momentum, and value, which are we're providing. We have an active process. To get that factor exposure right in the equity space using large cap stocks. And then what we're doing is we're putting on that 15% options overlay on top of that. So factor, investing is very important for a lot of investors out there to, really tilt their portfolios given what's going on, particularly in markets like this when, I
Mm-hmm.
kind of wish I was bringing out our low vol product, next week because
Yeah.
the markets are crazy. But so those are next on the horizon. We want to get traction with Omaha, get it out there, prove
Mm-hmm.
ourselves to investors more importantly, because we're in this for the long term. We want investors to see what we're providing is high quality. And then, once they see that, we bring out additional solutions for them.
Yeah, looking forward to seeing what you guys have. And to your point, low vol at this time would be a welcome addition.
Yeah.
But no matter what the underlying strategy is, you're still having that 15% expectation on the income on top of whatever strategy you guys are using. So again, for income investors, you get the current income now, plus you get the strategies from the underlying. So that's great.
We think that's a good level of income as well. I mean, it's higher than some of the other players out there, but it's not too high where it gets crazy, where you're going to see these huge NAV changes, which
Yeah.
is no good.
Yeah.
Well, I shouldn't say it's no good to me as an investor, as a portfolio
Yeah.
investor. That's not for me, but some investors like that. So
Yep.
we
Yeah,
won't be.
there's a wide variety of strategies when it comes to these options ETFs. Some are better than others. So looking forward to seeing how this one goes. If people want to find more information, what's the easiest way to find you guys?
VistaShares.com is our website. We're on X. VistaShares ETFs is our tag. On LinkedIn, VistaShares is our tag there. And we have a lot of research on our website. We're going to be putting out more. And we're trying to communicate with investors through social, being pretty aggressive there. So we'll be coming out with information on our tomorrow morning, hopefully we'll be sending out information about the first dividend or the first distribution, I should say, for this month. And we're really excited just to get the ball rolling there.
Yeah, no, it's great. Thank you so much for coming on and talking about this great ETF. Again, it's OMAH, the VistaShares Target 15 Berkshire Select Income ETF. Adam, thank you so much for joining us.
Thank you very much for your time.